There is no doubt Bitcoin and the traditional markets are starting to look better. But until Bitcoin can reclaim that $19,000 resistance, a new low is still on the table. Let's go ahead and dive into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. We're going to talk about Bitcoin today and focus on the price action, discussing that recent move upwards pre-FOMC. Obviously the market massively front ran the data, so when that data came out as expected, the price was already priced in and we saw a little bit of a drop. A classic buy the rumor, sell the news type event. Obviously the price rejected from a pretty key point, and that key point was this upward trending resistance, as well as the range between the June to November low. If we zoom out, we can see the range between the June to November low. This bottom support level we held and developed for about 4.5 to 5 months. We have actually retested that support once more over here, and it seems as we have rejected. Now, if you remember back to our videos throughout this week and even last week and even a week before, we were talking about a move upwards to about 18,150 if we broke above that trigger. So that is exactly what we saw. We broke above the trigger, we had this continuation upwards to 18,150, exactly as expected, and we look like we actually rejected from that level. We're going to talk about what this rejection means, where the price can go from this rejection, and what is the potential to create a new low, as well as macro reversal. Before we get into it, smash the like button, comment down below, subscribe if you are new, and of course, join the Telegram channel. That will be the second link in the pinned comment down below. You get access to all of our charts, videos, analysis, information, news events, updates, so much more stuff. And of course, if you're interested in VIP channel, you can go ahead and contact me via the free channel to get access to the VIP channel where we do daily trading signals or whenever they are relevant. So let's go ahead and get into the data. For the month, currently, Bitcoin is up 3.16%. So more or less in the same spot we were yesterday. In yesterday's video, we obviously did have quite a strong rally overnight with FOMC, and then we'll kind of retrace back to that same point we were around yesterday this time. So 3.1% looking pretty decent. For the quarter, we are still down 8.78%. Where is that flipping point? It's around 19,100, okay? So for the quarter to turn green, we do need to break around 19,100-ish. So we do have quite some time to go before we see a green quarter. Obviously, with 15 days left in the month, if we do close out this one red, it will be the first time in history we have actually seen 4 consecutive red quarters for Bitcoin. Volatility 1.63, speeding up a tiny bit from our plateau at 1.58. But again, this should pick up over the next few days, but it will take some time as it does need to price in this entire 20 to 25 day period of almost no intraday volatility shift. So obviously we're going to see a fair bit of a plateau now in the volatility, even with the prices starting to rise. So what we are looking at is the liquidations. Liquidations tell us volatility. As there's more volatility in the market, as there's more volume in the market, we see more liquidations. What we have seen is 74 million in 24 hours. This is of course quite a decent amount considering the market environments and considering how much volume is in the markets overall. 74 million is indicating a fair bit of volume and volatility came into the market during FOMC. Obviously a good thing to see if you are trading, but news event volatility is not ideal for trading. This is the thing. News event volatility is volatility based on data that is not publicly accessed until it is, and when it is, it's almost too late. So it's essentially just gambling, okay? But let's go ahead and dive into the traditionals and what the market is looking like a whole, and then we'll talk about Bitcoin. So the DXY is hanging on for dear life at this 103.8 level. This 103.8 level is of course that next support line before we see any sort of continuation towards a downside. Structurally, we are developing some degree of support at this level. Of course, we do have this ascending trend line pattern right over here, which is indicating we have a horizontal and a diagonal structure support over here. If we go ahead and draw our upper trend line in, we can see some sort of falling wedge pattern developing with, of course, a fake out wick over here to resistance in December. Again, a falling wedge is a bullish reversal pattern. assuming this breaks to the upside, we can definitely see the markets come towards the downside. This is one piece of information over here that is hinting towards a possible rejection and reversal towards the downside for the markets. So something to keep your eyes on here will be a break back over this horizontal range, which will consequently break the DXY over this diagonal resistance, resulting in a swing to the upside. Let's take a look at the Dow Jones. We got rejected quite heavily from that 35,000 level, a very strong rejection, broke back below this uptrending resistance back in that bearish divergence pattern over here, and it looks like we're actually going to make a swing to the downside. Losing this low over here will confirm that swing to the downside, and our targets will be 32K. So the Dow Jones is not looking very good here. We had a failed higher high, we had a failed breakout of this massive resistance and a failed push above that diagonal. Triple rejection, not looking ideal. Again, for us to start looking good again, we do need to claim and get above and start closing dailies above that level. Until then, we are still technically under major resistance, and the downtrend over here is still very much intact. S&P 500, exactly the same thing, guys. Failed rejection for a higher high, failed rejection for the diagonal, failed rejection above that diagonal, triple rejection, obviously rejecting on that bear market resistance, and now we are creating a new downtrend. So it's not looking ideal for S&P 500. Of course, we are still underneath that uptrending diagonal, which is that uptrending support of that rising wedge formation over here. So this trend towards the downside is still intact. This was just a fake out to the upside. It looks like for us to see a continuation lower, we do need to lose this low to see any sort of move towards the downside, but we are still very much possibly going to see a move to the downside if that continues. For us to revert that, we do need to get above 4,100 and start clearing daily candles above that to see a swing to the upside. Here we go is the bond yield. So the 10-year government bonds are in a falling expanding wedge pattern. As you would know already, this is a reversal pattern indicating a possible swing to the upside. If broken, the target range is that higher point of the highest part of the candle in the wedge. So we're looking at 3.9%. If that occurs, the markets will reverse, the DXY will go upwards, again indicating some sort of bullish formation happening there for those markets and for the yields. Looking at the 2-year government bond yields, it looks like we're in a falling wedge pattern, again breaking through that horizontal resistance range will confirm that swing towards the upside. We're looking at 4.17% if that occurs. So as you can see already, guys, there's a lot of data in the yields, in the DXY, in the traditionals, suggesting rejections, suggesting bearish continuations. But let's take a look at Bitcoin. There's a lot is happening on the Bitcoin chart, and that is, well, first and foremost, we are actually still within this rising channel formation. If you remember back to our video, it would have been about 4 or 5 days ago now. We said, even if CPI comes in good, even if FOMC comes in good, and we swing upwards, we break through this trigger and head up into this range, like we said, and we did see that. I said the reality is we are still within the bounds of this rising channel, okay? And we are still under the major horizontal resistance level that we need to flip to see a continuation upwards, and what is very likely is that we'll see that swing to upside, reject, and come back under. That is definitely a possibility. So, looking from a structural standpoint, that is the possibility right now. We have rejected from the upper support, upper resistance of this rising channel formation. A rising channel formation is still a bearish structure, meaning that while this rising channel formation remains intact, we do have to anticipate there is a possibility that we can break to the downside. However, what I said is the higher we go within the channel, the more supports will create within the channel. Therefore, when we do break this level, we're breaking it from a higher point in comparison to a lower point, meaning that what were prior resistances are now supports, meaning that the directional move towards the downside may be stopped sooner rather than what we would have seen if we broke out earlier, which means the uptrend, the larger time uptrend, can remain intact even with a breakdown of this rising channel. But nevertheless, a breakdown of this rising channel would indicate a potential reversal point here for the midterm, and therefore a continuation downwards from a rejection of this November to June low. A very key piece of information. So what will it take for Bitcoin to create a brand new low? Where will Bitcoin need to go to confirm that low, and what will we need to see? So from a smaller time frame, obviously we're going to have to break down from this rising channel. That is an absolute guarantee. We're going to have to do that to see any sort of continuation to the downside. The key levels we need to break are these horizontal levels here. This level here is a very key level because we do have quite a strong gap over here between horizontal resistances. All we have over there is a chunk of volume, which is our VRPV in the center. So that is going to act as some temporary support, but it shouldn't act as a main support. As you can see, when we lose that VRPV point, we do have a significant reduction in trading volume. The main chunk of our volume is sitting between that 17,100 and at 16,500 level. Ignoring the VRPV POC, it pushes up to 16,700, 16,800. So our main chunk of volume is sitting within this range. As we have seen, that was where we consolidated sideways for about 15 days. So losing that level will guarantee, almost guarantee, as close as you can get it when it comes to trading, a swing to the downside. Particularly we're looking for these lower levels. Now, loss of this absolute low is what is going to trigger a new continuation downwards. That continuation downwards will take the Bitcoin price anywhere between. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. 13,900, okay, to 12,000. That is what we're looking at according to our volume ranges. As you can see in the volume ranges here, we do have a significant jump up at 12,000, and we have a jump between 13,900 and 12,000 after a steep decline. So what it tells us is if we lose this low, we're going to be declining into this range. We'll find support within this range, probably bounce around that 12,000, hit the 12,000 temporarily, because that area here is massive, massive support, and that could potentially be a new bottom. If we look at the 4-year cycle, the 4-year cycle suggests we can see anything between 13,900, so 14,000, if we go ahead and adjust that to the chart, 13,900 and 10,500. So according to our percentage drawdowns, that is definitely relevant. According to the macro structure, that is definitely possible. So a move towards the downside is still very likely. What will it take for us to basically delete the possibility for a move to the downside? What will it take for this macro reversal to be so certain that a move to a downside is no longer probable? Well, we've been talking about it for quite some time. What we need to see happen is a reclamation of that June low horizontal support range, which you can see on this chart over here. We would have to reclaim this June low horizontal support range. I'll go ahead and zoom out to a 4-hour, which is that horizontal support range between June here and November. The price will have to get above this level. That's number one. Number two, the price will have to reclaim the POC level. The POC level is sitting around about this red line. The POC level, sorry, is sitting at, let's go ahead and take a look, around about this red line, so 19,000. So we'll have to get above that resistance, we'll have to get above 19,000, and consequently, if we get above 19,000, we're actually breaking out of this falling wedge structure you can see on the chart right over here, and that will confirm this macro structure is reversed, and that would be the trigger for a confirmation and reversal out of the larger time frame bear market downward sloping resistance, and of course that will send us into a new or developed uptrend. Will that uptrend develop into a macro uptrend or a bear market, a bull market? That is a whole nother question, but that will develop into a uptrend on the macro time frame, potentially allowing the price to at least swing upwards to retest some of these lows, 28 to 30,000. That is all we're looking for. Until that happens, Technically, guys, come on, let's speak technically. Until that happens, all we are seeing right now, unfortunately, is a retest and rejection of our June low. That is what we're seeing. What was our June low? Let's remember back to what our June low was. Our June low was a descending triangle structure. We had a descending triangle structure. Okay, it broke towards the downside. Descending triangle structures are bearish patterns. Okay, we broke towards the downside. We are potentially retesting that horizontal point here. That, of course, is a bearish retest unless the price can reclaim that level and break through, which of course is happening at that 19,000 trigger. I'm gonna leave it there, guys. I hope you found today's video informative. Of course, I only had like 3 hours sleep. I was up all night until like 5:30 a.m. waiting for FOMC, and then I went to sleep and woke up a couple hours later. So I'm very tired today, so I tried to keep today's video a little bit shorter, but I hope it was formative. I hope you learned something, and most importantly, I hope you became a little bit more aware about the macro environment and the situation of the price action. Right now is not the time to be FOMOing in and jumping in the market and buying as much as you can. Of course, we're getting close to that point. As you can see, we're very, very close. But the closer we get, the more resistance is going to start popping up, the more likely we're going to start to see rejections, okay? Just like anything, if you look at any sort of price action, let's go ahead and draw our two horizontal trend lines. If we take two horizontal trend lines here, and we see the price action jumping around, okay, and you're like, okay, I'm going to take a long over here, and you take a long down at the bottom with a stop loss below, okay? For example, like this, the closer and closer the price gets to that upper resistance, the closer it gets to upper resistance, the higher the chance of rejection at any point. Okay, so we're seeing that similar thing. The closer we get to these macro reversal points, the greater probability we see a rejection. Just as we have seen from historical trading price action, every single time we get very, very close to that bear market downtrending resistance, we see brutal rejections. That concept stays relative. The risk return at these major rejection points become very unfavorable, and a lot of people look for shorts. We're seeing that same thing starting to occur over here. Okay, I'm gonna leave the video here. I hope you enjoyed today's video, and I'll catch you guys in the next one. Cheers.